You need a winning strategy if you want to make it in crypto. Here's my strategy in a nutshell. I trade conservatively to build up capital, stack up my long-term holdings, and place selective bets on risk, controlled opportunities with large potential upsides like building products. This simple strategy is relatively structured at a high level but gets more flexible and adaptable once you go deeper. So it'll thrive in any type of market. Diversification into different classes of activities shields me from catastrophic loss and gives me enough positions to catch any sudden upsides when they arrive. And since each part on its own is straightforward to execute, it's a strategy that you can adapt to. Starting today, if you're not yet sure of your own strategy, understand this. Crypto trading and investing is nothing more than a series of games. These games vary in difficulty, and you naturally have a feel for at least one game. New games pop up all the time, and it can be overwhelming to stay on top of it all. So, what makes a winning strategy? A winning strategy is personal. You focus on one game where you can be above average. In sports, it pays to be focused. You don't see Rafa Nadal playing ping pong, nor do you see Messi playing basketball. In crypto, it's the same. Play the game that calls out to you the most. Because like a professional sports player, the effort you put in reflects directly with the results you get. And when you learn and master one game, the world opens up and more opportunities would come to you. Keep in mind, focus here means you spend over 80% of your time and effort into it, leaving the 20% for discovery and diversification. It's just the 80-20 rule. Okay, so you're convinced you need to focus on one game. Which game is right for you? Obviously, you'd want to pick a game that makes more money than it loses for you, more often than not. Go with your gut and test out a tiny amount. It is no more difficult to make large moves than it is to make small moves. You need time to prove to yourself that the game you're in is truly one you should play, so be patient. Dial that risk way back. Enjoy the process of small wins so you can win big. If you're still not sure which game is right for you, I'll walk through a few of my favorites and see if there's one that sticks out to you. I'll also give my personal rating for each game and give myself a score of how competent I'd be. You can do the same! So we'll go over my top 3 games that I'm playing right now and how I'm dividing up my attention, time, and money. Seasonal DCA, custom trading bot, and discretionary futures trading. Seasonal DCA is taking a proven strategy of dollar cost averaging and using an analytical, emotionless approach to identify the right seasons in order to buy and sell a large market cap asset with high volume like Bitcoin or Ethereum. For me, the biggest realization is that most retail traders don't buy and sell in season and in the wrong amounts. And if I simply bought low and sold high and had a consistent, repeatable way, I'd be set. This alone would allow me to make it. It will take a few cycles, but it would be near certain. Crypto market cycles are hard to predict, but their effects are very real. Here's what generally happens in each season. In crypto winter, all asset prices fall dramatically. It seems everyone is panicking and selling to the point of everyone losing hope, getting angry, and giving up. This is a very hard time to buy, and a lot of buyers end up catching the falling knife and really hurting their portfolio. Many inexperienced traders and investors leave and never come back. Ideally, you should rotate most of your DCA allocation into stable coins before winter starts. Then you just wait for spring. Spring is basically a boring time. You get a lot of choppy up and down price movement that doesn't really make it clear which way the market is headed. There is an overwhelming sense of boredom where people feel apathetic toward crypto. This is when the bottom happens. This is when you should start dollar cost averaging your way in. It's generally a few signs like the breaking of market structure on the weekly time frame, price staying above 200-day moving average, etc. that lets you know your holdings are ready for a takeoff. So take your time and buy Bitcoin and Ethereum with your stable coins. Then you can basically take some off exchanges and into your hardware wallet. You wouldn't want to sell too early in the summer. Summer is where almost everything seems like up only and you have a full-on bull market. The transition from spring to summer is unexpectedly quick, so by the time summer is felt, the market would have already moved double-digit or even triple-digit percentage upward. News coverage would be almost all positive. You'll hear about some asset classes going to the moon with some crazy gains. This is also where a ton of influencers will pop up, chime in, and make a ton of content. While the general population is loose with buying, resist the temptation to put new money in. If you've done proper allocation in spring, your positions are in profit already. Instead, you should keep paying attention so you can spot signs of summer slowing down. One possible sign would be seeing the EMA 9 crosses below the EMA 30. Another one would be the breaking of market structure on a high time frame, like the daily chart. These signs are never exact. Calling the top is probably harder than calling the bottom. Start taking profits by selling part of your DSA stack into stablecoins when you start seeing one or more of these signs. Finally, fall is where retail traders and new incumbents are FOMOing and betting on the last stretch, which won't happen. People in general will be greedy for more. When you can see the opposite side of market structure breaking on the weekly time frame, you really should swap all your DCA profit into stables, as winter is coming. So with the knowledge about the seasons, all there's left to decide is how much to allocate this cycle or 4 seasons. For me, most of my crypto portfolio will be allocated into seasonal DCA. Once you've decided on how much you'd allocate to DCA, know that the amount you bought in this time range is not to be sold until the opposite side of the cycle appears. For simplicity, you can break up the buying and selling into 3 different times, for each of the 3 signs you'd spot in the high and low seasons. For example, you can start buying in spring, put 30% of your DCA portion into Bitcoin or Ethereum, then add 50% when you see the second sign, and leave your 20% for the start of summer, when price has moved around 30% from the bottom. Then, in summer, when your positions are in profit and you see the first sign of slowing down, sell 30% of your allocation to take your first profit. Then another 50% when you start hearing is the top in. Keep the final 20% in case the market is irrational and decides to push for all-time highs. You can sell the final 20% when winter starts and prices fall more dramatically, signaling a bear market. Again, you don't have to be exact about it. Basic knowledge about what a good exit looks like would do. For risk, I'd rank this as low. This strategy has the long-term time frame in mind and ignores price action unless it breaks up or down through key price levels. In the short term, price wouldn't matter so much. For upside, I'd say this is a medium. This is highly dependent on how much the market moves in each cycle. So far, crypto as an asset class is deemed to be quite volatile, so we can expect a medium to high upside regardless of how long or short the cycles are, if we can get our entries and exits right. For conviction, I'd say this is as high as you can get. Markets have cycles, and crypto is no exception. As long as you can wait it out and are good at your entries and exits, you're bound to be profitable. Overall, I'd allocate roughly 70% of my crypto portfolio here, and give it a 9 out of 10 stars. If you want to see more content on using dollar cost averaging and finding more precise, high probability buy and sell signals, there's a poll in the first comment. Be sure to let me know. The next game I want to share is designing a custom trading strategy and building a custom trading bot to execute my trades 24/7. Because I've been a professional software engineer for many years and have spent the last 2 years learning the ins and outs of trading bot building, I'm at a point where I'm very comfortable designing, building, testing, and improving trading bots. This is not something everyone can do, but like I said in the beginning, strategy is personal. I'm going to focus on playing games where I have an above-average chance of winning. I have a running theory that if I can extend what I learned from seasonal DCA and model when I buy and sell, as well as how much to buy and sell into variables in a model, then I'd have something that I can optimize in order to make my bot into a repeatable profit-generating machine. For example, I'd want to identify ways to make the market cycle smaller and smaller, meanwhile successfully managing risk so that I'd be able to have a high chance to buy and sell more often, but not so often that I'd have to compete against high-frequency quant traders and institutions, which I don't necessarily want to do at this point. I'd also want to be able to beat hodling, or buy and hold, by a significant percentage on a regular basis. And of course, the goal would be to have a consistently profitable bot that thrives all throughout the crypto seasons. In the spirit of building in public, I'm actually going to open up and show you my progress so far and what stage the trading bot is at currently. Would you like that? This behind-the-scenes look has never been shown to the public, and I'll show you the steps I took, the thought process and assumptions I made, what obstacles I ran into, and how I am in the process of overcoming them. Give this video a like and subscribe to encourage me to keep making content like this. All right, back to the custom trading strategy. So I started by making the assumption that each crypto trading pair forms a market, and that market has a set of participants, buyers, sellers, holders, traders, institutions, or whoever, which each of these people have a set of beliefs about this trading pair that is not easily changed. This led me to realize that if I could identify the unique characteristics of a particular trading market and add those variables to my trading model, I'd have an advantage versus other bots that treated every crypto trading pair as equals. Also, I realized that crypto resembled more like the Forex currency exchange than the stock market. Not much of a revelation, I know. Bear with me here. This made me realize perhaps I should view each transaction as a swap instead of buy and sell in the case of stocks. When you're buying a stock with your USD, you're in fact swapping your stable currency for a riskier, more volatile asset. And the same goes the other way around. When you're selling a stock, you're in fact swapping your volatile asset back to your stable currency. Not exactly earth-shattering news, but when put two and two together, I came up with my basic winning criteria. As long as I can find a highly probable range, relative to my last trade that I've observed price reverse in the other direction, I can continually swap between my volatile and stable asset in order to capture the price difference. And that it would work regardless of whichever direction the market is going. Did you get that? Let me paraphrase in another way. I could care less who's involved in that market. As long as I can find the average move that will result in a big enough price movement, I don't care whether it's up or down. When price goes up by that factor, I sell, which is swapping the volatile asset to the stable one. And when price goes down, I buy by swapping the stable asset to the volatile one. The rest of the time I can spend optimizing those parameters and introduce ways to make it dynamically adjusting. The risk would be if this asset pair I selected had permanently lost value and fundamentally changed the demand by its market participants. This extreme case has happened only once with Luna UST. So I knew I better pick something that has massive network effects, where the majority of participants have a long-term bullish outlook, and there was significant trading volume and historical data for me to backtest against. I ended up picking ETH/USDT, so I had coded the algorithm in its simplest form, and I was shocked to see the result of such a simple, brain-dead algorithm. I manually tweaked the parameters after about 100 trial runs, and found it to beat hodling by over 100%. The point is, a lot of time and effort went into making this. I found a set of parameters that gave fairly decent results in backtesting. I ended up picking an ultra-conservative set of parameters, where I expected a 2 to 5% gain during a bear market, where holders lost 60%, and 11 to 12% gain during a bull market, which lost to holding by a significant margin. So it didn't lose money in either markets, but didn't make enough versus just holding in a full-on bull market. Obviously, this is not the end. The algorithm has to be tested way more rigorously and tested with new live data. But for me, it's an amazing start, and we're running out of time in this video. I'll move on. For risk, I'd rank this as medium. Even though, in my opinion, Ethereum and USD Tether will continue to be a highly traded pair, and that Ethereum is likely to continue its network effects and may eventually dethrone Bitcoin as the #1 crypto in the world, there's still a non-zero chance it can fail and go back to pre-2020 prices. For someone who'd want to use this strategy in the medium to long term, I cannot give it a low risk rating. Because the algo is particularly resilient to bear markets, I think medium risk is a fair assessment. For upside, I'd say this is as high as it gets. I'm counting on, of course, that my assumptions hold true and my basic theory is correct. Then I'd need to fine-tune parameters, make the dynamic adjustments to be more accurate and sensitive, or even bring on the help of machine learning to find even better algorithms to do this. The fact that this is 100% fully automated means I won't miss any valid trades from the algorithm and will have it running for years to come. For conviction, I'd say this is high. This is largely because of my background in technology and product engineering, as well as my personal drive to see this through. I have a list of experiments to run and potential ways to improve the bot, with the help of more advanced technical analysis. Overall, I'd allocate roughly 20% of my crypto portfolio here, and also give it a 9 out of 10 stars. If you want to know more about the key lessons as I'm building out my bot, as well as how much you can earn with it, let me know in the poll. It's in the first comment. The final game I want to cover is futures trading, where I take an ultra-cautious, discretionary approach based on my learnings from professional and experienced amateur technical traders who have proven to be consistently directionally correct. I am aware that a discretionary approach can sometimes consist of more art than science. So as a beginner, I'm applying stricter risk management rules inside a thorough process, which I'll cover in the next section. I've picked futures trading, as opposed to spot trading, as it provided me with an easy way to both long and short an asset. I'd want the flexibility to make money in up and down trends. I'm using 5 to 10x leverage because I don't want to put up that much capital per trade, and yet don't want to be liquidated too easily. I've recently found 10x to be okay for me, though this can change depending on the asset I'm trading. There's no magic behind what I do in trading. Just a simple framework of levels to levels trading, which I learned on Twitter for free. I'm not in any trading signals group, nor have I ever copy traded. Let me know if you have experience in either. I also had a really helpful tip from a well-known professional trader. I can't remember who or where I saw that video from, but essentially this tip helped reduce the chance of me getting stopped out and helped me increase my win rate by a significant percentage. And in the cases where I am wrong in the trade, I end up breaking even or take a tiny loss most of the time. Because I've experienced big losses before, I'm keenly aware that this is a high-risk, high-reward game. So my risk per trade is small, less than $100 max loss if I've been trading that pair for a while, and about $20 max loss if it's a pair I'm new to. It does mean it'd probably take a longer time for me to grow my portfolio, but I'm okay as I don't want an unnecessary drawdown if I can help it. Besides trading tiny to begin with, I also only trade limit orders with predefined stop losses. Most of the time, I'd anticipate how I believe the price would react when it reaches a certain level, submit a conservative entry, and let it play out. On the occasions where price is in profit and has moved away from my entry quite a bit, I tend to move my stop loss at slightly above break, even so I won't lose money, even if the trade turns around on me. This may not be ideal, but my theory is that the less you lose, the more capital you have to win in future trades. I'm still learning every day. This game is inherently risky, so I'd play it as conservative as I can while learning how to be more effective in taking profit in each trade that turns out to be directionally correct. In order to stay consistent, I always map out my key parameters before I submit each trade. This way, I know my exact max loss, max gain, anticipated reward to risk ratio, and how much capital is required to make this trade. As I said before, I always start small, so my max loss would start with $10 to $20 if I'm completely wrong. So I'm not going to lose any sleep over any trade. I always mark the trades on my TradingView chart to visualize it before submitting and put notes to explain my logic why I took that trade, so I can look back to review my progress. Since I don't want to babysit my trades, I have predefined stop-loss and take-profit targets on my entry. I'd adjust these if the trade goes my way, but not against. So, what has been the performance so far? I started consistently trading at the beginning of the year and am up 12.45% in my P&L. So no, it's not like I can retire from it. But it's been fairly consistent so far, 8 times in a row with a win or break even. And that's a great sign. My goal is to make it so consistent that I can win or break even 18 to 19 times out of 20 before I increase my risk per trade to the next level. For risk, I'd rank this as high. As crypto markets are volatile, it's really hard to trade consistently. There's a risk that my trading rules don't play out and I end up in drawdown, and that will slow my portfolio growth even more and in the worst case be wiped out. This is top of mind and is why I'm approaching this game with extreme caution. For upside, I'd say this is medium. The upside is there, and because I'm trading small consistently, I will be there when the seasons change, which will help me with the seasonal DCA game I covered earlier. For conviction, I'd say this is low. I'm just a beginner trader and have much to learn. I expect this to be a way for me to practice getting good entries and exits and will allow me to succeed in other games like the 2 I talked about before this. Overall, I'd allocate roughly 10% of my crypto portfolio here and give it an 8 out of 10 stars. If you want more content on how I trade futures, how I use leverage to reduce my risk, and how I'm able to trade fearlessly and know I have a profitable strategy, you know what to do. Take the poll in the first comment in the video. So, after you pick a game, what do you do next? Jump right in? Of course not. In order to win, not only is having the right strategy important, the execution of that strategy is just as important. You need a process to follow, so you systematically get better at playing that game. And you need a system to continually improve your process. Let me show you my process. Then you can take it and adapt it to your game. My process has improved and iterated over the years, but I can simplify it into 5 major steps. They work because they form a loop, so each time I go through the loop, the entire system, which is basically my execution ability, improves. Here is my process. Learn enough to be good enough. Reduce inconsistency. Backtest with historical data to see past performance. Simulate live to see recent performance. Open to public for feedback. Seek expertise. Iterate to improve. So the first step is to learn enough to be good enough. As you can see from the earlier explanation, I approached everything from a beginner's mindset and achieved level 1 in terms of competence before moving on. Then, I figure out a way to reduce inconsistency so it becomes less risky overall. For seasonal DCA, I identified signals that are highly measurable, which means my identification of the seasons became much more predictable. So even if I'm not precise enough, I'd still be able to win. Likely for the custom bot and futures trading, I set explicit rules for a simple set of actions and avoid overcomplicating things as much as I can. So far, it's working out. If applicable and you have access to historical data, run it through so you can judge how well you do. If your game doesn't have this type of historical data, it's a game where you can't really practice, and it's a game I'd stay away from, at least until you have access to such data. For me, seeing good performance across different time frames and market conditions is a great boost in confidence that the way I play these games is going to last for years to come. Backtesting itself is not sufficient, and so you need to play in the real world with real-time conditions. It's important to structure your process where you can limit your risk, but test out how well you do in a real environment. Lastly, we all need feedback and need to improve on our execution ability. This is where something like YouTube is so powerful. I get to make content and share what I know and what I'm struggling with. And by sharing with people like you, I can get feedback into what's really working, what's not working so much, and perhaps what can be done to improve. This, in my opinion, is the best way we can really level up. I hope this video gave you enough insight on a strategy you can use and rely on for you to make it in crypto. The more you understand what the key factors are, the stronger and more resilient and smart your strategy would be. A winning strategy is one that you decide and focus on playing a specific game most of the time. Because you're choosing something where you have an advantage, you'd get better odds than the average player. Then by following a process, you increase the chance of success by improving on how well you execute your strategy. The key here is to raise the baseline and lower the variance. Well, that was interesting. Stick around for the next video. If you liked this video, consider sharing with a friend. What was the biggest takeaway for you? Let me know in the comments. This is Smart Crypto, and you've been so awesome to watch until the end. See you next time.